Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and what does the future hold, lengthening cycles, stock to flow, or the 4-year cycle. If you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. So I'm going to be going over a few different models, and we're going to go through them systematically and try to be as fair as we can to each model. Okay, I'm going to try to come at this from a pragmatic point of view, and we're going to give credit where credit is due, and then pose questions that can be somewhat open-ended. Now, the main people I will be covering in this video will be, of course, myself, Dave the Wave, who is also a proponent of lengthening cycle theory, which also comes with diminishing returns. 100 trillion USD, who is the author of this. Well, I mean, he's the author of the stock to flow model for Bitcoin. The stock to flow model, of course, can be applied to other assets, but he is the main one promoting it for Bitcoin. And then the 4-year cycle promoted by Bob Lucas. And you might say, well, the stock to flow model and the 4-year cycle model are one and the same, but in fact, we can actually look to see, okay, well, maybe there are some differences between the two based on some of the charts that these guys have put out. So we're going to go through this systematically. Hopefully I do a good job. I did this entire presentation tonight. It's going to be a long video, but hopefully we kind of bring everything out into the open and simply walk through all the charts, try to come to some conclusions, and then just continue along the way. So the first thing we're going to do is we're going to look at the stock to flow model. And this is the chart this is one of the charts that 100 trillion USD typically puts out on his Twitter account. And what it shows is the price of Bitcoin on the y-axis, on this y-axis here, on a logarithmic scale versus time, and it's color-coded by the months until the halving. Okay, and one of the things you can note is that we are trending up right now. And it's color-coded by the halving, or months until the halving. Same sort of area we were last time when we started trending up. And also you can see a similarity over here as well. Now the first thing I noticed when I looked at this chart was, well, it only goes back to 2013, which I didn't know if there was a reason for that, but I looked a little bit harder, and there it was, right? He provided another chart that stepped into it even longer. But what I want to first say, if you're not familiar with the stock to flow model, I just want to quickly say what it is used for. It's used to evaluate the instantaneous stock supply against new production flow of the asset. And so this could be applied to gold, to silver, and he is applying it to Bitcoin because Bitcoin has an instantaneous stock supply. We know what it is, and this is where he's ultimately coming up with a valuation for Bitcoin and ultimately what trend he sees it on based on the supply. Okay, so it's mainly about the supply and the new production flow of Bitcoin, which is why the halvings in this case, and for this model, the halvings are very important, right? So the halvings are very important for this model because it's primarily built around new production flow, the supply of Bitcoin. Now, if you go to his other chart, he has one that goes back even further, and there are some slight differences. For instance, you can see the first two peaks were color-coded orange-ish yellow. This one was orange. This one was yellow. So you can see that this one sort of took place slightly after this one, because by the time that this one got yellow, it was already heading back down. And then in the first peak, it was green up here. So there are some differences, I think, and maybe they can correct me if I'm wrong. I think that they would say that this cycle was very early on. It was before a halving had even taken place, and so the argument then becomes, well, it's not as important as later cycles. Okay, another argument that I've seen, and there could be some validity to this argument. I don't necessarily agree with it, but I'll just want to present everything, is that this cycle was the same as this one here. So the argument goes that, like, this first peak here and this subsequent like 85-90% retracement is actually in fact part of this cycle as well. So this is one big cycle, and then this is another major cycle, and then we're in a third major cycle. So I think those are the two main arguments that they would say. So he recently published this chart on his Twitter account, and what it does, and I've actually also shown this chart before, it shows it shows Bitcoin, and he's actually scaling it to the 2020 halving month close. And what he's doing is he's normalizing it, so you can quickly see how how the price performance of Bitcoin did after each halving from each market cycle. So the blue line, the dark blue line, would be maybe purplish, would be after the first halving. This blue line would be after the second halving, and then the third line would be after the third halving. And quite notably, we are ahead of schedule in reference to this market cycle. Okay, we're going to talk about this a lot in the video. So right now we're ahead of schedule in reference to this market cycle. Now, he put out a tweet recently that said, RIP lengthening cycles and diminishing returns. And the first thing I want to say is in terms of poking fun at the various theories and getting jabs in when we can. I'm guilty of it too, right? So I'm not gonna be here to try to pretend like I'm gonna take the high road, because in March when Bitcoin crashed down to $3,800, it certainly seemed like we were further away. But he put out this tweet, RIP lengthening cycles and diminishing returns, and we're gonna systematically go through this. So and first I'm gonna break it down on his chart. So the first thing we notice, if we look at the time as measured from the halvings, he's actually showing on this chart a time frame difference of 5 months. So I don't know if people would consider almost half a year as lengthening, but suppose the next one were another 5 months out, could we continue to say that they are exactly 4 years if each one is, say, getting longer? The other thing that you can easily note from this chart is that we have diminishing returns. So saying things like RIP lengthening cycles and diminishing returns, I would respectfully say, well, what about this cycle? Is the argument that this cycle did not have diminishing returns? Is the argument that it did not take longer? Because from my perspective, as measured from the halving, which I don't know that that's necessarily the best place to measure it from anyways, as measured from the halving, both tend to hold up, according to this chart. Now, of course, his argument is not that this one is, that we're diminishing from here to here, and I'm sure he's not arguing about, this time frame here. I'm fairly certain, and he can always correct me if I'm wrong, that he's referring to this one in which we are ahead of schedule. And in fact, the ROI as measured from the halving is actually higher than it was during the last market cycle as measured from the halving. So with that in mind, I suppose he's suggesting that lengthening cycles and diminishing returns are not true. Again, my contention with this, respectfully, would be how do you reconcile that necessarily with this move? Clearly diminishing returns, right? Clearly diminishing returns. Just because we're ahead of schedule now does not necessarily mean we will stay ahead of schedule for the next year. It's possible, and I will contend, of course, it's possible that we do, and I'm sure if we do, I will be there to congratulate him on such an accurate model. But I just want to say, to some degree, this is claiming victory on a theory, and we're in game 1 of the NBA Finals, right? It's too early to call. I think we still have 12 months before we're at the end of 2021, and Bitcoin has a tall order if it's going to not experience diminishing returns as measured from the halving. And in fact, I didn't calculate it out as measured from the halving, but I know as measured, well, I have before, but I don't know what it is off the top of my head. As measured from the bottom, for us to not experience diminishing returns, Bitcoin would need to go to approximately $310,000. The reason we say this is because in 2015, the local low of Bitcoin was around $200. I think it was closer to 176. Let's just say $200. We know that it peaked at around $20,000. That would represent a 100x move. But in 2018, in December of 2018, Bitcoin went to $3,100. So if we were to measure the ROI as measured from the bottom, then it would actually indicate that Bitcoin would go to $310,000 in order for there not to be diminishing returns. And it would need to do so, according to this model, to not be lengthening, it would need to do so in the next 12 months. So what that would imply is that from this point, Bitcoin would need to go up more than 10x from here. Now, I don't think that he has actually suggested that it would be 300,000. I'm pretty sure he's thrown out the number 288,000, which I still think is pretty optimistic. To get to a price of $288,000 within 12 months. And I think I've also seen him say things along the lines of 100K by the end of 2021, which I still think would be very optimistic. But that would certainly be a lot more likely than almost a $300,000 Bitcoin by the end of 2021. So with this in mind, he's claiming victory here in saying that, okay, lengthening cycles are wrong, diminishing returns are wrong, despite the fact that the first two cycles we can see that both were actually true. So I guess his suggestion is that the price of Bitcoin is going to do something like that. The ROI, in fact, as measured from the halving, is going to do something akin to this, where it's basically just going to increase from here. And I'm sure he would agree that there would be pullbacks along the way. Nothing goes up monotonically, of course, but this is the suggestion for diminishing returns to be false, for lengthening cycle theory to be false. We would need to see Bitcoin essentially just go up and up and up for the next 12 months and barely look back, right? Barely look back at all. A few corrections, of course, back down would almost certainly happen, but we would have to during those corrections we would have to quickly turn back around and continue pushing higher. So my contention is that is it not still possible even at this point? Okay, even at this point, is it not possible that we eventually fall back down below this line? I think it's a distinct possibility. I think it's too early to call yet. This is my contention here, is that it's too early to call that in fact we will stay ahead of schedule, and that I also think that this could be a reasonable path, right? I think this could be a reasonable path that would yield still diminishing returns and lengthening cycles. So, and then, peaking somewhere around this point. And this was just randomly drawn. I don't know exactly where this would even line up. You could push it this way, you could push it that way, and we would still see diminishing returns if something like that were to happen. Now, there's another theory posted and discussed a lot, specifically by Bob Lucas. And before I actually segue away from the stock to flow model, I will say that despite the jabs at my theory, but I've done the same, so I'm guilty of that guilty of that myself. He does put out a lot of good content and has grown the space for Bitcoin, which I think is a very good thing. I think he's been able to capture the imagination of a lot of people and get people interested in Bitcoin that maybe would not otherwise be interested in it. And to his credit, if you go back, so far, we in fact are on schedule, okay? So to his credit, we are on schedule. Again, game 1 of the NBA Finals. I don't think we can for sure say that this cycle is correct yet, or this theory is correct yet, but we will keep an eye on it. The next one I want to talk about is Bob Lucas. And if you guys like analysis on not only Bitcoin, but also precious metals as well. Stocks, this guy has a lot of good stuff. Okay, he's got a lot of good stuff. He talks about the 4-year cycle theory, but he talks about it in a slightly different way than the stock to flow model. So his argument is that you can, I guess, essentially break these cycles down into 4-year cycles. However, the cycle peaks can in fact be shifted from, they can be left shifted or they can be right shifted. And because they can be shifted, what's more important is where the bottom is, not the peak. Okay, it's more important where the bottom is. And you can see this one was in late 2014, early 2015. This one was 4 years later. And then he's suggesting in this picture, in this chart that he put out, that the next bottom could be, in fact, maybe around, I don't know exactly where this would fall on this log chart, but it looks like maybe around $40,000 to $50,000 in a few years, in 2023. But you can see that he has the peak sometime in 2022. So his suggestion is that this is the bottom, another bottom here, and then the next bottom will be here with a peak that is left shifted from, instead of say some of the other cycles where it maybe was shifted in a different way. So the funny thing about this is that it actually lines up fairly well with lengthening cycle theory, albeit according to this chart, I think he has it at around almost $400,000. I'm sure, and again, he can correct me if I'm wrong, I'm sure he would say that this was, this number is not set in stone and that it, he would not be surprised if it peaked at a lower number or even a higher number, right? A lot of this stuff is just educated guesses. It's not meant to be taken literally. It's not, a lot of times when I put out a specific price prediction or something very specific, my argument is, I know this is what it will not do because, as we say, all models are wrong and some are useful. So I would argue that all the models that all of us are presenting are going to be wrong in some way. But I think that all of them are useful in some way, and that's the reason why I'm talking about them. So I suppose that, again, I'll show that his other tweet in a minute. I suppose that he's talking about here that it would rally up to around 100K in 2022, come back down in late 2022, and then go up for a final peak for this market cycle, or maybe this one will be in the next market cycle but left shifted in summer of 2023. And again, the funny thing about this is that it is a 4-year cycle because he's doing it from, say, bottom to bottom, bottom to bottom. I'm not really sure what he's defining as the bottom over here, or maybe he's choosing a number. I don't know exactly. I think he has showed it before, so I will say I'm sure he has something. But he's saying, okay, bottom to bottom, bottom to bottom, and that this peak will be right shifted in this 4-year cycle, and that this peak will be left shifted in this 4-year cycle. And again, I hope I'm doing the model justice because I really do want to do the model justice. I think that is the argument that he's putting forth. So one thing, however, I found on his Twitter when I was doing my research was he made a post where he said, okay, well, from a price perspective, the difference between gold and Bitcoin is we need to wait a decade between bull markets for gold, but between bull markets for Bitcoin, we only need to wait 3 to 4 years. He goes on to say, in the future, you'll wait decades for both. Today with Bitcoin, you're not buying dollar devaluation, but Bitcoin appreciation towards its settling intrinsic value. So I think what he's suggesting quite clearly is that in the future, we will have to wait decades for both. And so I imagine that the implication of that is that the 4-year cycle will not hold up forever. Again, he can correct me if I'm wrong, but that is what I would assume the implication would be, but that he does think that we're in an early stage now to where it still will hold up. So I suppose that maybe this is something he could think, he might project to happen. Because this chart was actually published, I think, a few months ago. So I just kind of filled it in up to where we currently are, just a rough drawing. And then I just took the liberty of filling us into this peak, back down to the bottom, and then back up to a new peak. So I assume this is what he thinks will happen. Now, I want to present some of the stuff that I do, right? And hopefully this stuff is useful to you guys. And then at the end, we're also going to talk about someone else who talks about lengthening cycle theory and diminishing returns. So the first chart that I would say in defense of lengthening cycle theory and diminishing returns is we can look at the running 1 year ROI of the price of Bitcoin. And if you look at this macroscopic trend between the bottoms of the 1 year ROI, we can see from this bottom here to this bottom, we had 2.5 years. And then from this one to this one, we had 4 years. So the implication for the 4-year cycle, I guess, and again, I think with Bob Lucas, it might not be exactly set in stone because of how he has his chart and how peaks can be shifted. But maybe we'd say the stock to flow, if it is a factored 4-year cycle, this would actually not continue the trend. It would basically just be saying that, okay, this cycle is going to be the same trend as, or it's going to be the exact same amount of time as last cycle. So that would be the implication. And so my argument is that, well, why can't it be longer and continue the trend of lengthening? Maybe somewhere between 5 to 7 years before the 1 year ROI gets back down to a bottom. And if you look at the macroscopic trend line, you can see that we have these 3 peaks on this trend. Of course, this will not hold forever because eventually we'll get down to an ROI less than 1. But for now, it does seem to be a pretty good indication as to where the local top might be. If we look at some of these moves, you can see the first one had a more rapid acceleration up, back down, and then up. This one was not nearly as rapid. So the argument is that, well, maybe this one, while it's doing well so far, maybe it does something like this, and then ultimately peaks out way over here. And then we end up going back down, something like that. If we overlay the 2-year ROI, you can see a similar trend, where the peak would also somewhere fall in this region. We also will quickly put on the 3-year and the 4-year ROI, just so you guys can look at it. Okay, I'm not going to talk about 3-year and 4-year ROI because you get the idea, and when you're looking at a 4-year ROI, there's just simply not as much data because it took 4 years to get data in the first place. Now, what if we denominate it by month and look at it, in discrete values averaged out over each month of each year, and we look at the 90-day ROI? Well, we can see, in my opinion, based on the data, and this is my interpretation of the data, it appears to be diminishing. You can look early on and see that we had fairly high ROIs, and that each market cycle later, they appear to be lengthening and diminishing. And so it could look something like this, and you might say, well, this is over these candles or these bars. Well, I mean, we've seen stuff like that before. If I just draw it from, say, this bottom to this top, we've undercut it as well. So all I'm doing is connecting bottom to top, and so on and so forth. So I see this trend continuing, and to me, it seems undeniable that the 90-day ROI is diminishing. Right? We're just not simply getting to these levels where we're going to see a 90-day ROI of over 10x. Okay? If you look at the 1-year ROI, you can see a similar pattern. The time frame between these peaks is lengthening, the ROI is diminishing. So I would project something out like this. Diminishing, lengthening. This shows the price of Bitcoin. This is the risk metric that I use on the channel a lot. And I've used this to measure what I deem the risk of Bitcoin at key phases in the market cycle. So this is a logarithmic scale of the price of Bitcoin versus time, color-coded by the risk level. If we just take a quick look, all 4 peaks, we get into the red zone, and because we get into the red zone, we know that this model accounts for diminishing returns because the market cycle ROI, as measured from bottom to top, has been decreasing each time. So the only way for it to really stay in the red is for us to account for diminishing returns in the model. One of the things you can note is that we were actually at this level in terms of the risk in 2019. And that did not stop us from cooling off for a while. It did not stop us. It doesn't mean we're going to cool off again like we did in 2019, but if the argument is that we just got into this region, therefore we have to continue going up, then I would say, well, what about 2019 when we went from $3,100 to $14,000 in a few months? If we take the color out and plot the risk on the secondary y-axis, it's a pretty interesting pattern as well. The first one went almost straight up. The second one had two peaks that was elongated and took longer. The third one was a little bit calmer and took even longer than the second one, which took even longer than the first one. This is what the fourth one looks like so far. My contention here is that we could still, there's still not a guarantee that we're just going to go straight up back to the risk level of 1 by the end of 2021, which is what the 4-year cycle theory would somewhat imply, or at least the stock to flow model would imply, that we basically would be going back up to the top almost monotonically. Similar to, say, this cycle over here, or similar to the very end phase of this market cycle. This chart shows the price of Bitcoin annualized. It shows the average price of each year, it shows the minimum, and it shows the maximum price each year. And one of the things we can note is that, well, the first thing is, putting these in discrete values by year might not be doing the model justice, because it's kind of a silly way to do it, but let's just make sure we cover all of our bases. We can see that these were our general areas of expansion, and that these were the general areas of contraction. My argument is that potentially this market cycle will have another area of expansion. So that means that 2020 could be an expansion, which, well, it is. I mean, it's moving up from 2019 almost assuredly. In fact, it's probably mathematically impossible for it not to, unless the price of Bitcoin were to just completely go to zero or something. 2021 could trend higher as well. I mean, it might not, but it could. And then maybe 2022, the average price is also higher and not lower like it would have been in, say, the prior cycle. But you can see that as measured annually, these two are the same, but from here to here it's increasing, and then this one is increasing from here to here, but then these two are the same. So maybe this one will be longer, maybe it won't, and we'll say that is a possibility, maybe it won't. But if we trend up, it's possible that we trend up to 2022. It's even possible that we trend up to 2023. It's possible that our peak is in 2023, but then we still trend down because maybe the peak happens at the beginning of 2023, and then we trend all the way back down to, say, a much lower number, and so the average price is a lot lower. So maybe the maximum would be higher, but the average could then theoretically be lower. And then maybe this would be the a future contraction phase. Another thing we can look at is if we take the maximum minus the minimum divided by the minimum, and then I just multiplied it by 100 to get a percentage, we can look at a measure of volatility and see that we are generally decreasing. So this is further evidence, in my opinion, that the ROI, whether you want to measure it from the halving or the bottom, is decreasing each market cycle. And this is why I think it is unlikely that we get to $300,000 or $288,000 this market cycle. I think it's heavily unlikely that it happens. It could happen, right? We're not going to say it can't happen. I honestly didn't think we would get to 20K in 2020. I'm not sure. I mean, for a long time I've been saying a sustainable 20K. It remains to be seen if this is a sustainable 20K. But sometimes we put the models together, and then we see what happens, and we'll see if Bitcoin can keep moving up from here. And if it can, great. We all stand to make a lot of money in the event that it does, assuming we're all holding Bitcoin. So we can also look at this chart. And the reason I like this chart is because we're going to measure the cycles in a couple different ways. So the first way we're going to measure it is from bottom to bottom. The first one, if you think of this one as the first market cycle, took 15 months. The second one took 37 months from bottom to bottom. The third one took 46 months from bottom to bottom. So the implication for, say, the stock to flow model, I think, would be that the next one would also be 46 months, which would be, in my opinion, it would be changing the trend, okay? And you could try to look at these and say, okay, well, this is a 22-month difference, this is a 9-month difference. I don't know what this one would be, maybe 4 to 7 month difference. Maybe you could argue that it'll just go to 0 and therefore it'll still be 46 months. Again, it's a possibility. I don't necessarily buy it, but it is a possibility. So let's say the difference is another, say, 4 to 7 months. Then maybe the time between, say, bottom to bottom is 53 months, or 50 to 53 months, and that could imply that the bottom comes later than the end of 2022, because in order for us to be on the same schedule as last time, then the bottom would need to come at the end of 2022, just like the last one came at the end of 2018, and then this one came at the end of 2014, but this one came at the end of 2011. Okay, so if we continue on, what if we measure it from bottom to peak instead of bottom to bottom? Well, the first one was 9 months, the second one was 23 months, and the third one was 34 months. Those look lengthening to me. Again, maybe the next one will be 34 months, which is the implication of the stock to flow model. But what if it's longer, right? What if this trend simply continues in some fashion? Of course, we could try to figure out, we could maybe take ratios, we could look at the difference. Whenever I do that, I often get criticized for only using 3 data points. And again, the criticism is fair, but if we had 10 cycles of data and we could see it more clearly, then it probably wouldn't be as big of an argument. Like, we would just kind of be like, yeah, this is what it is. We're still early on, that I think it merits discussion on how will the market cycles play out. This is an interesting chart. So this shows the price of Bitcoin on a logarithmic scale versus time. And then on the secondary y-axis, we have the return on investment time in days, also on a logarithmic scale. So the white line corresponds to the price corresponding to the primary y-axis. The yellow lines correspond to the secondary y-axis. And what it means is, if you bought Bitcoin here, how long would you have to wait to experience a 2x on your investment? One of the things you note clearly is that as we continue on through each cycle, the bands are getting higher, right? They're simply getting higher. You might say, well, this one isn't higher, right? This one up here will be, right? Most likely will be. I haven't actually looked at it, but in order for us to be printing a 2x from 20K, we need to get to 40K, and we're not there yet. So until we get to 40K, we're not even going to be printing the 2x point from this region. And you can see that some of the ones from later, so I mean, like, if you look at this peak, it went up higher than this one, but over each market cycle, you can see the bands generally get higher and they start to flatten out, which means as you get on in the market cycles, it takes longer and longer on average to see a 2x ROI. Because if it didn't, and diminishing returns were not a thing, then we would basically see bands like this that were almost vertical lines, where you could buy Bitcoin and see a 2x a few days later, right? Or maybe 20, 30 days later. But that's not the case. We're getting to the point where it's taking much longer, and once we start printing this band here and then a band over here at higher prices, I think it'll become evident that these are going to be even higher and they're going to be even flatter. This one just also shows 2x, it shows 2x, 10x, 50x, and 100x. The same exact idea. With 10x, you can see the bands are getting flatter. The time to experience a 10x is going up because these correspond to days over here. So maybe these are around 200 days. These are around closer to 1,000 days, and maybe these are closer to like 1,500 days. So it is getting longer to see a 10x return on your investment. This chart shows the price of Bitcoin on a logarithmic scale versus time. And if you take the trend angles, which we know would be dependent on the aspect ratio that you choose, I'm just choosing this aspect ratio because this is the default chart that the plotting utility I use gives me. We can note that from market cycle bottom to peak, we have a 74-degree move. The next one is a 51-degree move. The next one is a 34-degree move. If we continue on in this path, maybe the next one will be a 21-degree move, or so, somewhere in that ballpark. And maybe it could look something like that, or like that. I don't know. But ultimately speaking, we're just drawing it from bottom to top. The trend angles are decreasing. We would expect the returns to decrease. It seems like each one is taking longer and longer. This is the chart that obviously gets the most criticism for lengthening cycle theory. If you look at as measured, this is the ROI of Bitcoin as measured from market cycle bottom. Cycle 1 is blue, pretty impressive run. Cycle 2 is orange, 3 is yellow, 4 is purple. 4 is currently ahead of 3. This is the reason, part of the reason they measured it from the halving, but if you measure it from the bottom, you see the same thing. We're ahead of schedule as measured by the last market cycle. But what you notice is, say, well, this is where he put out RIP, this is where 100 trillion USD put out RIP, lengthening cycles, and diminishing returns. If just being ahead of the prior market cycle were evidence enough that it was going to not take as long as, or basically be just as long as the prior market cycle, if you look over here at the second market cycle, it was completely on par with the first market cycle for the first month or two, maybe even longer than that. And you can't see it with this resolution, but early on, the third cycle even outperformed the second cycle. Okay, you can see the yellow line actually goes above the orange line very early on. So if all we needed was to see the cycle be on course with the prior cycle, then how can we necessarily say, well, the second cycle was on course with the first one, but it ultimately did not keep pace with it once it tested time. So the argument here, is it possible that we continue on up this trend line and go to a $300,000 Bitcoin, which is what we would need to go to get to 100x ROI from the market cycle bottom around $3,100? It would imply a $310,000 Bitcoin. Is it possible in the next year? Maybe it's possible. I don't want to discount anything. In my opinion, it's not likely. It's not likely at all, and I just simply don't see it happening. That's ultimately what we need to do to keep up. It's a tall order. We'll see if it can do it, but it is a tall order because it would imply a $300,000 Bitcoin by the end of the year 2021. However, as I said, this cycle kept pace with that one. Also, at one point, cycle 4 was ahead of cycle 2. Yet another reason to say just because it went above a prior cycle does not mean it has to keep up with it, because cycle 4 went above cycle 2, but it did not keep pace with it. In fact, now it's much further off. So is it not possible that maybe we come up to here and then ultimately come back down and don't keep pace? In my opinion, it's possible. Now, I want to talk about someone else. This guy's his Twitter handle is Dave the Wave. You can see the source. He puts out some useful charts on lengthening cycle theory and diminishing returns. This first chart, he describes it as histogram expansion, a measure of momentum. You can see he's looking at the MACD, currently on par with a relatively earlier stage of the cycle as compared to the previous. He also has these logarithmic regression lines, and he's projected out that it will also take a few more years, not the end of the year 2021. He's noted, but if you look at this indicator of momentum, that we're on par with an earlier stage of the last market cycle, maybe mid 2016 or even a little before mid 2016, not 2017. So his argument is that in terms of momentum, we're still relatively early compared to the last market cycle, and that we will still see lengthening cycles. He has another chart where he looks at the prices off the mean. So this one would say a negative 40%, 47% down, 143% up. Negative 43% down, negative 45% down, 142% up would take us to $24,000. And then another negative 41% down is he's projecting back to the mean, which if I look, it looks like around $14,000 potentially, which could end up being around the point the 20-week moving average is at the time. Another interesting chart that he put out is he took out this fractal from over here. He said that interesting that the preference is evenly split. Looks like we got the second option based on this fractal previous mini parabola. The possibility of near $30,000 Bitcoin, I guess, is the implication before the correction. This is also by Dave the Wave. So here he's saying that according to this fractal, the price could go up to $29,637. I think all four of us, me, Dave the Wave, Bob Lucas, and 100 trillion USD, would agree that trying to predict short-term moves are very difficult. In fact, I'm sure if you go and look at any of our Twitter accounts, you can find several places where we got things wrong in the short term. But again, no one's going to tell you exactly what's going to happen in the short term. As I've mentioned, I think the short-term moves are more or less a random walk or geometric Brownian motion. That's what I think it ultimately boils down to. That's why day trading can be so difficult, because it's so hard to predict short-term moves. Now, he's suggesting that maybe it could go to a $29,000 Bitcoin before it comes back down. Well, I took a look at this other metric. So if you take the natural log of the price of Bitcoin divided by the 20-week moving average, you also get a nice macroscopic trend line. We know that this one will not last forever, because eventually it would imply that the price has to be below the 20-week moving average perpetually, eventually once it gets below 0, because the log of the price divided by the 20-week, if these are the same, it gives you a value of 1. If you take the natural log of 1, you get 0. Whenever this goes below 0, it would imply the price has to be below the 20-week moving average, so we know it will break eventually. One interesting thing, though, is that the second cycle had 2 peaks at this level. Maybe this one will. Maybe this one will too. Maybe we'll go up to the top a couple times, maybe 3 times. Maybe we'll go through it and start disrespecting the trend line this cycle. But I was just curious, what happens if we did go up to this level today or tomorrow? So let's suppose that we want to solve for the price in this situation. This would put the valuation at 0.71, the log of the price divided by the 20-week moving average. Well, we don't know what the 20-week moving average will be by the time we get there, but if we suppose that it's 14.5K and we solve for this equation, it would put the price of Bitcoin at 29,492, which is similar to 29,637. Again, I think predicting short-term moves is almost impossible, and I'm not saying by any means that it's going to go to $30,000 in the short term. I'm just saying that if it did, it would hit the peak here. So, wrapping all this up, okay, 100 trillion USD published this chart implying that diminishing returns and lengthening cycle theory is not true. I would contend that even on this chart, as measured from the first 2 cycles, we see both lengthening cycles and diminishing returns as measured from the halving, which I guess is the way he likes to do it, since his model is built around supply and the production flow into the market. This chart, however, shows that the time between the ROI, as measured from the 1-year ROI bottoms, it looks to be lengthening. So how do we necessarily explain this as well as the diminishing returns in the 1-year ROI? How can we say that Bitcoin will not experience diminishing returns when so far that is all we've seen? So far, we have not had a later cycle give a 1-year ROI peak higher than the cycle before. Even if you don't want to consider them cycles like I do, you don't even have to think of these as cycles. Just think of them as just the running 1-year ROI. The peaks continue to go down. The time between bottoms continues to increase. If you look between the time between peaks, it also increases, but I did not draw it on this chart. This chart, as measured from bottom to bottom, shows lengthening cycles as well. How do we explain that necessarily? How do we explain these 2x, 10x, 50x, and 100x ROI bands? They're getting flatter and they're taking longer. That implies diminishing returns and lengthening cycles. If we're not seeing diminishing returns and lengthening cycles, why are the angles as measured from bottom to top, which depend on the aspect ratio, why are they decreasing? Why, if we say that because we're on track now, why does it imply that we necessarily will stay on track for the rest of the market cycle? As we can see, we did not always stay on track in the past. Even though the 4th cycle at one point was ahead of cycle 2, it did not hold it. At one point, cycle 2 was on par with cycle 1, it did not hold it. We also see that macro level volatility, annualized in terms of the maximum and the minimum, is decreasing, implying diminishing returns, lower volatility. We can see that the risk metric that I have here shows that we are moving up. We're getting close to a risk of 0.66 or so, 0.67. If that were the implication that we have to continue up, well, what happened in 2019? We were at the same level. If you look at the 1-year ROI, the returns are also diminishing and lengthening. And again, I'm not even trying to arbitrarily pick cycles here, right? I'm not measuring it from market cycle bottom or even from the halving for that matter. We're just looking at the running 1-year ROI, discretized in terms of months and averaged over each month. So that's what we're essentially looking at in all these charts. So to summarize, 100 trillion USD, Bob Lucas, Dave the Wave, and myself, I think we all have models that are worth discussing and worth talking about. And it's fine, I think it's fine to get the jabs in. I'm sure when there is a correction, hopefully at that time I will try to restrain from putting my own jabs in. But I think that there's some evidence for everything, right? There's some evidence for stock to flow, given that we are currently on track. There's evidence for the 4-year cycle theory as presented by Bob Lucas, considering that he measures it from each bottom. I think he's not including this bottom here though, or maybe he's combining these two. I'm not exactly sure, but maybe there's some evidence there in terms of a shifted peak. I also think there's evidence for diminishing returns and lengthening cycles. I think we all just use the data to try to back up our argument, and it's our different interpretations of that data, which is what leads us to different theories or different theories. So, when I talk about diminishing returns and lengthening cycles, it's not that I don't want to see a $300,000 Bitcoin in 12 months. I would love to see that, right? I would absolutely love to see a $300,000 Bitcoin in 12 months. My point is if we don't see it, then I think we'll look back and say, well, the data did suggest that the likelihood of seeing, a $288,000 Bitcoin in a year was very low to begin with. So if in fact we do hit it, if in fact we do get to a $300,000 Bitcoin in 12 months, if we can get to that level, then we are setting a new trend. And maybe you want to argue again at that point that it's like the institutional money, that we're on like an S curve of adoption. I don't know what exactly, there's a lot of different theories. But at that point, we will have new data, and maybe we can project out from there. All I'm doing is I'm using the data that I see and trying to interpret it in the best way that I can to provide a realistic view of the market cycle and to temper expectations. So that if in 2021 we're not at a $288,000 Bitcoin, or if we're not at a $100,000 Bitcoin, it doesn't mean that it won't continue to go up from there. It could continue the run into 2022. I'm very bullish on Bitcoin. I think it's going to trend up over the next few years. I think all four of us think it's going to trend up. The main difference is how quickly it's going to trend up and how high it will go. I think everyone here watching this video or this early on in the market cycle, I think we all just, we're here, hopefully we're going to make a lot of money. We're all sort of on the same side, right? We're watching Bitcoin go on this, momentous paradigm shift. And so we're going to experience that together. And there's going to be people coming in later in the cycle that will come in at the wrong time, and they're going to learn the lesson the hard way. And whether that's in late 2021, 2022, or 2023, there will be people buying at the wrong time. If you're looking at the price of Bitcoin now, at the time that I'm making this video, I think it's around $23,000. There's definitely a high probability that it will go lower than $23,000 at some point after this video, but it's not necessarily required. So hopefully this video has been informative to everyone. I hope I did every model justice. I hope I did it in a respectful manner, because I think that I think that it would be good if I could at least try to do the present each model in a light that is respectable, and that I'm not just glossing over key aspects of each model. If it comes to light that I missed something important, then maybe I'll come back later and clarify that. But hopefully this video has been informative. Hopefully we can come back to this video in a few years and see which model played out, and then continue to tweak the models as we go forward, and as we go on into whatever the next paradigm shift of Bitcoin will be. Hope you guys enjoyed it. Subscribe to the channel. I appreciate you guys subscribing. Give the video a thumbs up. Share this video with your friends so that they can see all the different theories and why we're so bullish on Bitcoin. And I think that'll wrap it up. Thanks for jumping into the cryptoverse. I'll see you guys next time. Bye.